With all the recent concern about the ups and downs of the stock market, often overlooked is an important piece of the investment puzzle, dividends. Joining us for this morning's U.S. Bank Economic 360 is U.S. Bank Vice President and Senior Portfolio Manager Mike Dennemann. He's with Business Courier publisher Jamie Smith to talk about how dividends fit into your investment portfolio. Mike and Jamie.
Thanks, Peg. Mike, thanks for being here today.
Good morning.
All right, let's start simply here.
Okay.
What is a dividend?
Sure, good place to start. So you can think of a dividend as your share of the profits. So it's important to remember that if you hold stock, you are a part owner. That's why we call them equities, because they truly represent an ownership interest. And like in any business, the owners share in the profits. So with a publicly traded company, after the bills are paid, after money is set aside for expansion and research, what's left over, a portion of that is carved off and returned to the owners, the shareholders, as a dividend. So it happens usually on a quarterly basis. And as Peg said, this is an important piece of the puzzle. Growth from stocks, of course, is very good, but getting paid cash every quarter is pretty good too. Yeah.
All right, so dividends are a good thing. Okay. How do the investors, how should we use dividends when we're looking and evaluating these companies?
Well, sure, that's a great question. Dividends often signal to us when evaluating different stocks that this is a profitable company. Dividends have long been the hallmark of blue chip stocks, strong, stable, very high quality companies. And so these, of course, are all very attractive attributes. And then even more important often is a growing dividend, one that's being increased sequentially over time. This tells us that this is a growing business. This is one that has the ability to continue to return bigger profits to its owners. Now, I say all of this with one big caveat, and that is that while dividends we think are very important and we like to see them from a stock, just because a company doesn't pay a dividend doesn't mean it's unhealthy. There are many types of companies, technology companies, for instance, which plow a lot of their profits back into their expansion and their research and development. So in the growing stages, there's not a lot left over for dividends. So important to remember, if you're going to invest in a stock that doesn't pay a dividend, just to evaluate why that is. Oftentimes there are very legitimate reasons. Other times, though, it can be a red flag.
Is there a combination of other things that go along with that dividend when I'm making that evaluation? I mean, how important is it, the dividend versus not the dividend?
Exactly. If you're looking for a company that's brand new, that's in a growth phase, and you're looking for it to just explode, it's probably not going to pay you a dividend. It's more focused on that growth process. On the other hand, a more traditional blue chip type company, a dividend is going to be a very big piece of that equation because the growth probably isn't as significant as a startup tech company.
Looking at like current times now, is there any time that the dividend is more important than not? I mean, given the environment?
Yeah, so I just sat here and explained how great dividends were, but I have to say that with a note of caution. Reason being, we're all aware that interest rates have been at record lows in recent years. And so many investors who traditionally have counted on income from bond investments have been forced to look elsewhere since bonds are paying relatively little in interest. So many of those investors have gone to high dividend paying stocks to make up the shortfall, and supply and demand has pushed the shares of those the price of those shares higher. So we sit here now waiting any day for the Fed to start moving interest rates higher. So as rates begin to climb again, that trend will reverse. Okay. Investors who were forced towards stocks will reevaluate and head back towards bonds. So that could put some pressure on dividend-paying stocks. So not looking to abandon dividends completely, but just be aware that if you invest in the types of stocks with the highest dividends, that they could be seeing some sales pressure in coming years.
Well, now that it's tax time, I guess I should go look at mine and analyze through those, right?
Good time to evaluate.
And I know who to call if I have questions, right?
Excellent.
All right, thanks for being here today.